Hello and welcome. It's great to have you with us for this discussion arranged by the experts at Pro Tax Accountant. You know, in the age of the side hustle, there's one question that seems to pop up over and over again. When does that little passion project, that thing you do on the side, officially become a business in the eyes of the taxman? Well, today we're going to get to the bottom of it by breaking down something called HMRC's Badges of Trade. Let's get right into it.
So, think about it. That project that's bringing in a bit of extra cash. Maybe you're selling crafts on Etsy, doing a bit of freelance design work, or flipping vintage finds you picked up at a market. Is it just a hobby, or have you, maybe without even realizing it, started an actual business? It is an absolutely crucial question, because as we're about to find out, getting the answer wrong can be, well, pretty costly.
Now, you might think this is all a bit of a gray area, but HM Revenue and Customs, that's HMRC, they don't just leave it to chance. They have a really specific framework they use to tell the difference between a hobby and a genuine taxable business. It's basically a checklist that's been built up over decades of UK court cases, and understanding it is the absolute key to making sure you stay on the right side of the law.
So why is this distinction so important? I mean, what's the big deal? It's actually pretty simple. If what you're doing is classified as a trade, then any profits you make are subject to income tax. And if you don't declare that income, you could be looking at some serious penalties, not to mention backdated tax bills down the line. So yeah, getting this right from day one is absolutely essential.
This is the heart of the matter. HMRC uses this 9-point checklist they call the Badges of Trade. Now, don't let the formal name intimidate you. Honestly, think of these lesser scary, rigid rules and more like helpful signposts. They just help to build a complete picture of your activity, which lets HMRC make a fair judgment.
All right, let's start breaking them down. The first group of 3 badges really zeroes in on your main motivations and the pattern of what you're doing. These are often the biggest clues, so they're definitely worth a closer look.
First up, we have the profit motive. You could argue this is the most important badge of them all. HMRC is asking, was your main reason for doing this to make a profit? Now, what's really important here is that it's about your intent, not what actually happened. You might not have made a penny, you could have even made a loss in your first year, but if your actions show you had a clear plan to make money, that's a huge indicator that you're trading.
Let's make this a bit more real. Imagine John. He's a keen gardener. To start with, he just sells a few extra plants to his neighbors, to cover the cost of his compost. That's a hobby. But then, he starts researching which plants have the best profit margins. He creates proper price lists, and he even starts a social media page to get more customers. You see? His actions are screaming profit motive, and that's what shifts his little hobby into the territory of a trade.
Okay, next up, the frequency of your transactions. Look, a one-off sale, like selling your old car, is almost never going to be seen as a trade. But when those sales become regular, systematic, and repeated, the whole picture starts to change. It suggests an organized, ongoing business. Stay with me. The next point might surprise you.
Think about Emma, a graphic designer based in London. If she sells a single print to a friend one time, that's just a hobby. But what happens when she sets up an Etsy shop, starts listing new prints every single month, and runs special promotions for holidays? Well, the activity is now frequent and it's organized. For HMRC, that pattern is a massive tick in the trade box.
This badge looks at what it is you're actually selling. I mean, some things are just more associated with trading than others. Think about wholesale goods or items people frequently buy just to resell them. That's a world away from, say, selling a family heirloom or a piece of art that you've personally owned and enjoyed for years. The type of item itself gives a big clue about what your intentions were.
But that's not all. Here's where most people go wrong. It's not just about what you intended to do, it's also about how you do it. Let's move on to the next set of badges, which look at all the practical, business-like details of your operation. Badge number 4 is all about adding value. Did you do anything to the item? Did you repair it, restore it, or modify it specifically to make it easier to sell or to get a higher price for it? This whole act of transforming something to boost its resale value is a classic sign of a trading business. You're not just selling it, you're working on it to make a profit.
Let's picture Lucy. She finds an old, tired-looking chest of drawers at a flea market. She takes it home, sands it down, gives it a fresh coat of paint, puts on some nice new handles, and then lists it on Facebook Marketplace for a much higher price. See, Lucy didn't buy it to use it herself. She bought it specifically to improve it and sell it on for a profit. That's a trade, plain and simple. How you sell your stuff is another massive clue for HMRC. Are you using methods that a typical business would use? We're talking about things like having a dedicated website, using online marketplaces like Amazon or eBay, or even advertising your products. All these professional little touches suggest you're operating like a business, not just someone having a clear out.
And listen, here's a pro tip you really need to hear. In today's digital age, it's incredibly easy for HMRC to get sales data directly from platforms like eBay, Etsy, and Amazon. This means being transparent and keeping good records isn't just a good idea, it's absolutely non-negotiable if you want to stay on the right side of the tax man.
Okay, let's talk about the money. Where did the cash come from to buy the item in the first place? Did you use your own personal savings, or did you have to take out a loan? If you borrowed money and the only realistic way you could ever repay that loan was by selling the asset for a profit, that strongly points to a commercial venture. It shows you've taken on a financial risk with a clear expectation of getting a return, just like a business would.
We are almost there. The final 3 badges really help to complete the overall picture. They look at things like timing and the wider context of what you're doing. Specifically, how long you own the asset, whether you have any other similar trading activities, and your original reason for buying the item.
This brings us neatly to badge number 7, the time between when you buy something and when you sell it. Generally speaking, assets that are part of a trade are sold pretty quickly. A short holding period often suggests you intended to flip an item for a quick profit, rather than hold it as some kind of long-term investment. Buying and selling within just a few weeks or months definitely points towards trade.
This table does a fantastic job of summing up the key differences we've been talking about. On one side, you've got a hobby driven by personal enjoyment with the odd sale here and there. On the other side, you've got a trade, which is all about the profit motive, frequent transactions, and business-like methods. The final 2 badges fit right in here. Badge 8, having similar trading activities, and Badge 9, the purpose of acquisition being for resale, well, they both land firmly on the trade side of this comparison.
So here's the crucial point, the main takeaway from all of this. As this official guidance from HMRC itself says, no single badge is the deciding factor. It's not a magic bullet. HMRC and the courts will look at all 9 of these factors together to form an overall impression. It's all about the weight of the evidence, not just a simple tick box exercise.
Okay, so we've explored all 9 of the badges. So what on earth does all this mean for you, practically speaking? Let's cover the actual next steps you should probably be thinking about right now.
First things first, there is some good news. The UK has something called a trading allowance. For the 2025/26 tax year, this means if your total gross income, that's your total sales before any costs are taken off, is £1,000 or less, you don't actually have to declare it or pay tax on it. But, and this is a big but, if you earn even £1 over that limit, you have to register with HMRC and declare the whole amount.
So, what should you do now? Well, here's a quick checklist. First, be really honest with yourself and review your activity against those 9 badges. Second, and this is so important, keep detailed records of every single sale and every single related cost. We're talking invoices, receipts, the lot. Third, make sure you know that £1,000 trading allowance limit inside and out. And finally, if you are in any doubt whatsoever, please get professional advice.
Look, navigating tax law can be really complex, and let's face it, everyone's situation is a little bit different. If you're still feeling unsure about where your side hustle stands, speaking to an expert can give you real peace of mind. For anyone who needs that kind of professional advice, the specialists at Pro Tax Accountant can offer guidance that's tailored just for you. You can see their contact details right there on the screen.
And that is our deep dive into HMRC's Badges of Trade. Understanding these 9 indicators really is the key to knowing if your side hustle is actually a taxable business. We really hope this has given you the clarity you were looking for. For more discussions that break down complex tax topics just like this one, make sure you subscribe to the Pro Tax Accountant YouTube channel. Thanks so much for watching.